So already the material was being shared in chat box. So anyone who want material can download from the chat box. So already I have shared it. So once again I am sharing it now. So now let me begin my discussion. Yeah. So value of supply. Sir, valuation. Before entering into valuation rules, first of all, we are going to learn what does section 15 deal with and certain inclusions and exclusions along with the debit note and credit note aspects also. Now we are going to have a discussion. So first of all, generally total we are going to learn 12 plus 4, total 16 topics we learn in this chapter called valuation. Entire material is being shared in chat box. So now let me begin with my discussion. So first of all, value of supply. Value of supply means nothing but the price at which the transaction has been made. Transaction value under section 15. Sir, Mr. A has sold goods to Mr. B. On what value GST is required to be paid? Generally, A is going to issue invoice to Mr. B. In that invoice, if they write rupees 1 lakh, on 1 lakh they will pay GST. In invoice, if they write 2 lakhs, on 2 lakhs they will pay GST. That means whatever written in the invoice, that is only liable to GST as per section 15. But on two important conditions. Generally, the transaction value means nothing but whatever is quoted in the invoice. The price at which the transaction is made is nothing but transaction value. Whether GST will be levied only on transaction value? Yes, but section 15 has imposed two conditions here. Condition number 1, price must be the sole consideration. Condition number 2, supply must be between two unrelated persons. That means supplier and recipient must be unrelated and price must be the sole consideration. Only when both the conditions were satisfied, here if you see plus was given, only when both the conditions were satisfied, then value will be the transaction value. Then value will be the transaction value. So now let us have a discussion regarding these aspects. What is the first condition? Price must be the sole consideration. Sir, what do you mean by the term price? Whatever written in the invoice, that amount only the supplier should receive. Any additional condition, any additional consideration, if the supplier receives, then the definition of a transaction value is not satisfied. Then we have to go for valuation rules to decide the value of supplier. So when does valuation rule will be applicable? Price must be the sole consideration. What do you mean by the term price must be the sole consideration? Whatever price is written in invoice, that amount only the supplier should receive. What happens if any additional consideration or additional incentive is received? In such case, then price is not the sole consideration. Then we have to go to valuation rules to decide the value of supply. So the first basic condition here is price must be the sole consideration. And second condition is buyer and seller must be unrelated. First of all, what do you mean by the term relative? Relative definition is different from different acts. For example, even in Income Tax Act also, section 48(2) relative definition is different. Section 56 relative definition is different. Like that here, relative, the term relative has been defined in rule number this section 15. Explanation they have given. In section 15, explanation, section 15 subsection 3 has defined the term relative. That we will learn in rule number 28, sir. Till then, keep it in hold. What do you mean by the term relative in GST is a different thing that we will discuss in rule number 28. But now what we need to remember here is buyer and seller must be unrelated. Because if buyer and seller are related persons, they will sell the product at low price and pay low GST to the government of India. So here government is going to lose. So that's why what they have specified here is buyer and seller must be unrelated. If they are relatives, what happens, sir? Then value must be decided using valuation rules. Rule number 28. So here price must be the sole consideration, first condition. Plus supply must be between two unrelated persons. Then only value will be the transaction value. That means on the transaction value, whatever is quoted in the invoice, on that value only you are liable to pay GST. But plus certain elements. What was given here is, even though these two conditions were satisfied, that means even though the price is the sole consideration for sale, plus supply is between two unrelated persons, additionally there are some plus certain elements were there. What are those elements? So they were given here in next page. If you see, the title here is Inclusions in Transaction Value. The title here is Inclusions in Transaction Value. What are the inclusions in transaction value? Number one, everyone is aware of this one. Actually paid or payable. That means even on credit sales also GST will be levied. Paid or payable, both have been specified here. For example, here if you see, contracted price is 7,000. Initially advance 7,000 is given. What is the transaction value? Transaction value is the payment received 700 plus receivable 6,300. Total 7,000 will be regarded as the taxable value. Total 7,000 will be regarded as the taxable value. So price actually paid or payable. That means even credit sales will also be liable to GST. That is the first part. Now coming to second part. Taxes other than GST, if collected, should be included in the value of the supply. So taxes other than GST, if charged separately, by the supplier, that means in invoice, additionally if we charge any taxes other than GST, they have to be included. Let me give you one perfect example. Sir, actually premises rent charged by the owner is 1 lakh per month. That means 12 lakhs per annum. Plus additionally 50,000 municipal tax also. Sir, generally who has to pay municipal tax? Generally from whom the municipal authority recovers municipal tax? From the owner. That means it is the owner's obligation to pay municipal tax. If that municipal tax is being paid by the tenant, that means obligation of the owner is being paid by the tenant. No? This also amounts to indirect rent only. That means along with the 12 lakhs of rent, additionally municipal tax is also being charged by the owner. So then 12 lakhs plus 50,000, 12 lakh 50,000 will be regarded as the value of supply. No sir, actually the owner is only paying municipal taxes. That means in this 12 lakhs rent, this 12 lakhs is inclusive of municipal tax. Then again specifically we need not add municipal taxes. Sir, when we need to add taxes other than GST, because now we are discussing GST only. Taxes other than GST, any taxes charged by the supplier. Just now I have given you municipal tax as example. If charged by the supplier, then we have to include this one in the value of the supplier. GST and GST says does not form part of the taxable value, but other taxes will form part of the value of the taxable supply if separately billed. That is the condition. For instance, if a supplier of goods pays municipal tax, additionally, if bill is issued, the bill amount itself, additionally municipal tax is levied. Sir, I will give you one more perfect example, sir. Manufacturers of rice. Sir, whether rice is liable to GST? Only branded rice will be liable to GST. Brand means having a registration under trademark, copyright act. Only if it is registered, then only rice will be liable to GST. Branded rice only will be liable to GST. But on rice, at the time of selling the rice, 1% market cess will be collected by the state government. 1% market cess. That market cess will form part of the transaction value. For example, rice is being sold for 1 lakh, in which 1% market cess will be charged in the invoice. Total 1 lakh 1,000. On that 1 lakh 1,000, then now we need to charge GST at the rate 5% if it is a branded. If it is unbranded, it's exempt. Okay, sir, I think it was clear. Market cess charged on rice should be included in the value of the supply. So like that, any taxes, sir, except GST, any taxes charged will be added to the value of the supply. Okay. So next thing, payment made to third parties by the recipient on behalf of the supplier. On behalf of the supplier. So for example, I have provided service to you, sir. I am the service provider, you are the service receiver. So for a consideration of rupees 1 lakh. Now you have to pay me 1 lakh and I will pay GST on rupees 1 lakh. 1 lakh plus GST I will collect from you. But what I have said to you here is, I am due rupees 20,000 to my friend. So I have given instruction to you that give for me only 80,000. 20,000 balance you give to my friend. Now tell me, GST will be levied on 80,000 or 1 lakh? On 1 lakh only. Because payment made to third parties, here to my friend you have paid 20,000. Even though you have made payment to my friend, it shall also form part of the value of the supply. It shall also form part of the value of the supply. So any payment made to third party, will form part of the value of the supply. So here if you see, grand bridge contracts with the ABC company to conduct a dealers meet. In furtherance of this, grand bridge contracts with vendors to deliver the goods like water, soft drinks, audio system, projector, all these services were being provided. The soft drink supplier wants payment upon delivery. ABC company agrees to pay the bill raised by the soft drinks vendor on grand bridge on receiving crates of the soft drink. This amount is not billed by the grand bridge. Sir, actually here grand bridge is the service provider. So he has given some instruction that soft drink payment should be given to another person. Even though soft drink payment is given to another person, entire value of the supply should be considered. The payment made to third parties. So recipient said that 20,000 you pay to another person. Whether that 20,000 also should be included. Yes. Any payment made to the third parties also will be included in the value of the supply, because here the payment is made to third parties on behalf of the supplier only. That's why that is the intention here. So now let me continue. So total 6 inclusions will be given, sir, in which I have completed 3 inclusions. Price actually paid or payable, taxes collected except the GST. So now coming to the next one. Yeah, let me continue. Point number 4. Incidental expenses, very, very important practically. So here only many people will get confused. Let me give you a complete clarification on this aspect. Yeah. Sir, here incidental expenses must be included in the value of the supply. Sir, what do you mean by the term incidental expenses? Here if you see, commission, packing, inspection, installation charges, generally freight also will be charged in the invoice. Whatever may be, even though for that services you give separate bill also, this will be included in the value of the supply. So for example, we are selling 28% goods, sir. Value of the goods is 1 lakh. Along with that, packing charges 5,000 were being collected. Whether on 5,000 packing charges 18% GST will be levied? No. Even though separate bill is given also, this is incidental expense. This is nothing but incidental expense. Incidental expense will form part of the value of the supply. I repeat, incidental expenses will form part of the value of the supply. That means what we need to do here, sir, this packing expenses, even though separate bill is given, we have to add to the value of supply. Normal product rate 28%. Then on packing charges collected also 28%. Freight collected also 28%. Sir, along with the bill, I repeat, along with the bill, if any incidental expenses, along with the normal value of the supply, if any incidental expenses were recovered, such incidental expenses shall form part of the value of the supply. Such incidental expenses shall form part of the value of the supply. Any type, you say commission, packing, inspection, installation, only 4 examples I have given, but the theory that was specified here is incidental expenses such as commission and packing, etc., charged by the supplier or anything else before or after the delivery, whatever may be, if any incidental expenses were being charged, So that incidental expenses should be added to the value of the supply. Okay. Next, coming to fifth one. This yesterday we have discussed in chapter called time of supply. For belated payment of consideration. For belated payment of consideration, additionally, what we will recover? Interest. Whether that interest will be liable to GST? Yes. So generally, loan interest is not liable to GST. But here, if you observe, interest charged for belated payment of consideration. Interest charged for belated payment of consideration will be liable to GST. Because here, if you see, the value for the taxable supply will include not only the base price, but also the charges for delay in the payment. The charges for delay in the payment will also be included in the value of the supply. Okay. So, interest, late fee, penalty. So, just a minute. Yeah, let me continue. Interest, late fee, penalty for delayed payment. Interest, late fee and penalty for delayed payments should be included in the value of the supply. Should be included in the value of supply. Sir, if you refer the theory which was given there, the value for the taxable supply will include not only the base price. The value for the taxable supply will include not only the base price, but also along with the base price, what they have specified here is any interest if they charge, such interest also will form part of the taxable supply. So here if you see, take this one as example, whatever the interest is recovered, such interest will form part of the value. Here if you see, the value for a taxable supply will include not only the base price, but also charges in delayed payment. You say interest, late fee, penalty, whatever the name you call. This is for belated payment of consideration, belated receipt of consideration, for which if we charge interest. Yesterday in time of supply topic, what we have discussed, whenever we receive, that will be called as time of supply. Whenever we receive, that will be called as the time of supply. Okay. So now coming to topic number 6, subsidies. Coming to topic number 6, subsidies. Sir, whether subsidies forms part of the value. Whether subsidies form part of the value. Here if you see, subsidy, non-government subsidy will be included in the value. If we receive any government subsidies, the government subsidies will not be included in the value of supply. I repeat, government subsidies will not be included in the value of the supply. Okay, here if you see, the subsidy is a sum of money given to keep the price of a service or commodity low. If we receive subsidy from government, such government subsidy will not form part of the transaction value. What must be included? Only non-government subsidies only to be included. Government subsidies need not be included in the value. Government subsidies need not be included. Only non-government subsidies only will be included. Okay. So now coming to exclusion, because here if you see in exclusions, sir, we have learned 6 inclusions. Sir. Total we have learned 6 inclusions. Sir. Now we are coming for exclusions. Sir, exclusions, if you see, government subsidy is given here. So government subsidy does not form part of the transaction value. Then what forms part of transaction value? Any non-government subsidies were received, they must be added. Okay. So now coming to the thing, exclusions from the discounts. Exclusions. So what are the exclusions from the value of the supply? First one is discount. Sir, discount may be of anything. Primary discount, secondary discount, cash discount, trade discount, seasonal discount, year-end discount, whatever may be the name, any discount which was reduced in the invoice. If in invoice itself you reduce discount, then after discounted price only GST will be levied. For example, 1 lakh is the value of the goods, minus 15% discount is given. So balance is 85,000. So whether on 85,000 GST will be levied? Yes. So discounts which were shown in the invoice should be excluded. Discounts which were shown in the invoice should be excluded. Okay. So this is the first part. Discounts that are allowed before or at the time of supply, they have to exclude it. Coming to the second part, if you see, discounts that are allowed after the supply. Sir, after the supply, that means after sale, if they want to give discounts, then what they need to do? These discounts should be given only by way of GST credit note. And once GST credit note is given, proportionate ITC should be reversed by the recipient. Very, very important discussion. So here we have to learn two important terms. Number one, what do you mean by the term debit note? Number two, what do you mean by the term credit note? These two aspects now we have to discuss in a detailed manner. Once those are discussed, I will come back to this topic. So in next page itself, I have given in a clear manner what do you mean by the term credit note and what do you mean by the term debit note? Whether financial debit notes and credit notes can be given or not. Once a credit note is issued, whether we need to pay GST or not. These are many doubts arised still in mind of many members. So let us have a complete clarification regarding that aspect. So GST credit notes and debit notes. Here if you see GST credit note, supplier might issue GST credit note. Supplier may issue GST credit note. So generally why we issue credit note? For three purposes credit note will be issued generally. To decrease the value of supply because we have already sold the goods. That means our customer is a debtor. Debtor will be in debit balance. That debit balance in order to get reduced, we issue credit note. So to decrease the value of the supply or to decrease the taxes, by mistake, instead of 5%, I have charged 18%. So I have to reduce 13%. So to reduce the taxes or to reduce the value of the supply. Number two, here if you see to decrease the taxes. First one, to decrease the value. Second one, to decrease the taxes. Now coming to the third one. When the goods are returned, that means nothing but sales returns. Sales returns means customer will not make the payment for that one. Or even though payment is made, we have to give him back. That's why when the goods are returned, then also to reduce the customer balance, we issue credit note. So generally credit note will be issued in three aspects. Number one, to decrease the value of the supply and taxes. Number two, to decrease the taxes. Number three, when the goods are returned. So these cases, GST credit note should be issued. Which is credit note, sir? GST credit note. That means credit note should contain GST. But one thing to be remembered here is conditions for issuing GST credit note. It is to be issued within the time limit specified in point number 4. It is to be issued within the time limit specified in point number 4. Sir, what is point number 4? Here I have given. Sir, this the recent budget amendment also I have included. This GST credit note should be issued before November month of the succeeding year. November month of the earlier it is September only. But now in the recent budget, Finance Act 2022, we are in 2022. In Finance Act 2022, it was clearly stated that for the invoices which were issued during the year, financial, let us assume financial year 21-22. For financial 21-22, maximum by next year, November, we can issue credit notes. Or if GSTR 9 is being filed earlier, in the GSTR 9, we have to give all the annual details now. Entire year credit notes we need to give now before filing GSTR 9, whichever is earlier. So there is time limit for issuing credit note. Sir, once the credit note is issued, supplier liability will decrease because he has paid higher tax earlier. Now the value is being reduced. When value reduces, tax also will get reduced. So upon issue of GST credit note, supplier's liability will decrease automatically. Recipient also should reverse the ITC. Since the supplier is reducing his value and paying taxes, recipient initially on original invoice, he might have claimed higher ITC. Now since a credit note is issued, recipient should reverse the ITC. Recipient should reverse the ITC. So upon issue of credit note, this is the supplier's duty. Supplier's liability will decrease. and the recipient duty is to reverse the ITC. Recipient duty is to reverse the ITC when GST credit note is issued. Where to disclose? In GSTR 1, table number 9B. Any amendments? Sir, by mistake, credit note also I have uploaded by mistake. 1 lakh credit note, by mistake I have uploaded as 10 lakhs. Can I make amendments? Yes. Amendments can be done in table number 9C. Credit note should be uploaded in table number 9B. Amendments to that credit note should be done in table number 9C. This is in GSTR 1. And in GSTR 3B, directly in outward supplies, we have to reduce this credit note and write net figure. Since outward supplies, from outward supplies directly, we have to reduce this credit note amount and taxes. Net only we have to write it as outward supplies. This I am telling from supplier point of view, sir. Then what recipient should do? Recipient should reverse the ITC. In other reverses, he need to write. You have to write this in other reverses. Next. Issue of a financial credit note. Sir, what I have discussed till now? GST credit note. That means credit note containing GST. But what happens if a financial credit note is issued? Sir, what do you mean by the term financial credit note? Credit note, if it does not contain GST, that will be called as financial credit note. Sir, credit notes, if GST credit note is issued, supplier's liability will decrease. But supplier, if he issues financial credit note, he cannot work out GST how much to reduce. Simply for the entire year, he want to give 5 lakhs discount for entire year. Then what he need to do? For 5 lakhs, he need to issue credit note. But he didn't issue GST credit note. He has issued financial credit note. That means credit note does not contain GST. Department is forcing the recipient to pay GST on this financial credit note. But no need, sir. Very, very important clarification given in the circular. So issue of financial credit note. When financial credit note is issued, supplier's liability will not decrease. When financial credit note is issued, supplier's liability will not decrease. When supplier liability will reduce? When GST credit note is issued. Upon issue of GST credit note, supplier liability will decrease. But for financial credit note, supplier's liability will not decrease. At the same time, recipient also need not reverse the ITC. Since the supplier's liability is not decreased, recipient also need not reverse the ITC. That is the clarification. Okay. So you can go through the circular, sir. 2 important circulars were given. In the circular 105, they said that if financial credit note is issued, recipient should pay GST, they have specified. Later, that circular has been withdrawn in circular number 112. Initially, they said that we have to pay GST, 105. Later, this 105 is withdrawn in circular number 112. Okay. So this is GST credit note. Sir, is it mandatory to issue GST credit note? No, because the term here they have used is may. The term here that was used is may. That means that's not mandatory. So financial credit notes can be issued. So credit note which do not contain GST. When financial credit note is issued, supplier need not reduce his liability. At the same time, recipient also need not reverse the ITC. This is very, very important aspect. Practically many issues were being raised regarding this aspect. So we have completed GST credit note. Now I am entering into GST debit note. Sir, credit note, why we have issued? To reduce the value. So now to increase the value, we issue GST debit note. Here if you see, purpose of GST debit note. To increase the value of the supply. Sir, what was given here? To increase the value of supply and respect to taxes, or to increase only taxes. For 5% GST have charged. So in 2017, 18 and 18, 19, the dealers of MRF tires, they have charged only 12% GST. Later they have increased it to 18% GST. For the different 6% GST, they have issued GST debit notes. So to increase the tax or to increase the value of the supply, what they need to do? GST debit note will be issued. What will be issued? GST debit note will be issued. Okay. So now coming to the next one. Here if you see, GST debit note should be issued before the time limit specified in point number 4. What is the time limit? Before November month of the succeeding year. Same as credit note only. Before November month of the succeeding year, or due date of filing GSTR 9, whichever is earlier. Before November month of the next year, or date of filing GSTR 9, whichever is earlier. Okay. So coming to the next thing. Original invoice number should be mentioned on debit note. But now consolidated debit note concept has come into existence. Consolidated debit note can be issued even though invoice wise you couldn't work out. Now consolidated debit note practically has come into existence. Upon issue of debit note, supplier liability will increase. To reduce the taxes, we issue credit note. To increase the taxes, we issue debit note. Upon issue of debit note, supplier's liability will increase. Automatically, recipient can avail it as ITC. Sir, debit note here, liability increases means it is benefit to government or loss to government? It is benefit to government. That's why, is there a concept of financial debit note? No. Financial debit note means nothing but additional consideration you are receiving. That's why here issue of GST debit note is mandatory. Sir, in credit notes, since the liability decreases, the government has used the term may in credit note. But in debit note, the term that was used here is shall. That means it is mandatory to issue GST debit note. It is mandatory to issue GST debit note. If you want to increase the value of supply, you have to mandatorily increase the taxes and you have to issue GST debit note. Okay, here financial debit note is not possible under GST Act. Issue of GST debit note is mandatory. Whereas financial credit note you can give because their supplier liability generally decreases. No, if it was raised. If you raise financial credit note, it's benefit to government. But financial debit note is not permissible. Okay. So now coming to the next one. Sir, we have completed our first part. What is the first part? When both the conditions were fulfilled. That means, let me try to have a quick recap. When price is the sole consideration per sale, plus supply between two unrelated persons, in such cases, what will be the value of the supply we have learned? Plus certain elements, 6 inclusions and 3 exclusions we have learned. 6 inclusions and 3 exclusions we have learned. So by this we have completed the first part when the conditions were fulfilled. Now we have to come to second part. Here if you see, this part A got completed. When price is the sole consideration plus seller and buyer are unrelated, that part we have completed. Now we are coming to second part, where value cannot be determined under section 15. That means when buyer and seller is related or price is not the sole consideration. In such case, we have to come to here. Here if you see, yeah. So coming to page number 8, page number 8. Yeah. So here is the theory. Rule number 27. Value of supply of goods or services where consideration is not wholly in money. That means price is not the sole consideration. I will give you the perfect example. Sir, second-hand goods. Second-hand goods I will tell later. Okay. Sir, I am purchasing a mobile. Let us assume I am purchasing a mobile. OnePlus mobile I am purchasing for rupees 40,000. I am purchasing OnePlus mobile for rupees 40,000. Then on exchange offer, my old mobile is there, Samsung mobile. I am exchanging that one, and now he has sold for me for just 25,000. That means old mobile for 15,000 it has been exchanged. Actually, the mobile cost is 40,000. On exchange offer, I got the mobile for 25,000. Now tell me, how much I am going to pay to them? 25,000. Whether GST will be charged on 25,000 or 40,000? On 40,000 GST must be charged. Because, sir, here you are giving how much? 25,000. Price is not the sole consideration. Because here seller is receiving 25,000 plus second-hand mobile also he is receiving. That means price is not the sole consideration. In invoice, if they write 25,000, only 25,000 are they receiving? No. Along with 25,000, additionally, along with 25,000, additionally they are receiving a mobile also. So that's why in this case, price is not the sole consideration. That means on 25,000 should we pay GST? No, because here price is not the sole consideration. Then what we need to do? First preference must be given to the open market value. The same mobile, if it was sold to other person, what is the open market value? 40,000. So we have to pay GST on 40,000 only. Sir, if open market value is not available, this is a new kind of mobile where open market price is not available. Then what we need to see? Monetary consideration. How much I am paying? 25,000 plus money value of non-monetary. That means how much is the second hand that mobile you are exchanging? No, what is its value? Let us assume it's 14,000. Then 25,000 plus 14,000 total 39,000. On 39,000 GST will be. Sir, when we have to come to second point, if first point is not available, then only we have to come to second point. All the 4 points, whichever is higher, that I didn't say, sir. Here in an order we have to follow. When price is not the sole consideration, first preference must be given to number 1. First preference must be given to open market value. First preference must be given to open market value. When open market value is not available, then second preference we have to give to monetary consideration plus additional value of the non-monetary. That means our goods value plus second hand good I have exchanged, that goods value. Both we need to include. Sir, the second hand goods valuation is very typical, sir. Then like goods we have to see. When first 2 points were not available. When first 2 points are not available, then we have to go for point number 3. Sir, what is point number 3? So if you see point number 3, like kind and quality, that means similar goods, same type of goods to other person. Sir, here open market value means same good. Whereas here in point number 3, if you see like kind and quality, you need to see. That means similar goods we are going to see. Same such type of goods, like kind and quality, that means having similar features. Another company mobile is there, sir, with similar features. They are selling for 43,000. Then 43,000 will be the transaction value. Sir, first preference, what we need to see? Open market value. When open market value is not available, second preference, money value plus non-money value. If that is that cannot be valued, then in such case, like kind and quality. If this is also not available, cost plus 10%. If this one also like a kind and quality is also not available, then cost, what is the mobile cost to the manufacturer we need to see? It is 30,000, sir. So 30,000 plus 10% we will assume. That means 33,000 is the value of supply. Or any other reasonable means. Officer will make best judgment assessment and determine the value of the supply. So finally, what I am trying to convey to you here is when price is not the sole consideration. I repeat, when price is not the sole consideration. So first preference will be given to open market value. If it is not available, monetary plus non-monetary. If this is not available, like kind and quality. If this is not available, 110% of cost of supply or any other reasonable means. In case of goods, first preference should be given to 110%. Then only if this is not available, other reasonable means. But in case of services, either this point A or point B, anything you can follow. This point A is rule 30, point B is rule 31. In case of goods, first rule 30. If it is not available, then only rule 31. But for services, either rule 30 or rule 31. Anyone can be followed. Okay. So by this we have completed this rule number 27. Sir, what is the difference between open market value and like kind and quality? Sir, open market value means same good in open market which price we are selling. Whereas like kind and quality means similar good in open market for which price we are selling. That is the difference between open market value and like kind and quality. Some examples were given for your reference. If you want, you can go through it. So by this we have completed rule number 27. Sir, rule 27 to rule 35. Rule number 27 to rule 35 forms part of our discussion. So in which we have completed rule number 27. So materials have been already shared. Let me share you once again. Some members were asking. Let me share once again in the chat box. Yeah, material was being shared. So here there is a one issue. Reliance Jio is showing more in 26 years as compared to invoice given by my client. Whether the difference becomes supply in GST, sir, or can the difference adjusted through any other way? It becomes a supply. Whatever is given in form number 26 years, it is nothing but the incentive given by the Reliance Jio. We have to levy 18% GST on that aspect. Next, if recipient is raising debit note, who has to file and consider in a GST filing? Sir, even though recipient raises debit note, who has to upload that one? Supplier has to upload it as a credit note. If supplier issues credit note, then only he will upload. If supplier does not issue credit note, it becomes a financial credit note. For financial credit note, no reversal is required. Okay. Next, material is already been shared. So now coming to rule number 28. Sir, for rule 27, when we have to go to rule number 27, when price is not the sole consideration for sale, we have went for rule number 27. Now we are entering into rule number 28. What is rule number 28? Supply between related persons. That means when buyer and seller is related. When buyer and seller is related, what we have discussed, in such case, we have to come to rule number 28. Or between distinct persons. Sir, what do you mean by the term distinct persons? What do you mean by the term distinct persons? Same person having different registrations. Registration in one state, another registration in another state. Even though they belongs to same persons, he is having two separate registrations. No? We treat it as a distinct person. Even in the same state. Sir, in the same state, can I get 3 registrations? Yes. We can apply for every place of business. We can apply if we want. It's not mandatory. If we want, we can apply any number of registrations. But all those will be regarded as the distinct persons. All those will be regarded as the distinct persons. Because if you see here, the definition of the term distinct person is given in section 25. The definition of the term distinct person is given in section 25. So if you want, you can go through it. So now coming to the next thing, whenever the supply is made between distinct persons, there also the value cannot be determined because from one branch to another branch they are selling. So here value cannot be determined. Or between related persons, if you sell, you have violated section 15 condition. So here the value is to be determined using rule number 28. What rule 28 has specified? Let us have a discussion here. Rule number 28. Same, once we have learned rule number 27, remaining all will be in the same manner. Sir, whenever we are selling to related persons, sir, for related persons, sir, 5 lakhs value of item, I am selling only for 4 lakhs, sir. 5 lakhs value of item, I am selling only for 4 lakhs. Then, what will be the value of the supply? 5 lakhs only. Sir, I am selling only for 4 lakhs, sir. You are selling to the related person. Whenever you sell the goods to the related person, as per rule number 28, open market value will be regarded as the value of the supply. So first preference must be given to the open market value. Sir, what is the open market value? Same good to unrelated persons for which price you are going to sell. That will be regarded as the open market value. Okay, next. Coming to the next thing. Or 90% of like goods and quality. Sir, open market value means same good to another person for which price we are selling, we need to see. Or similar goods, like kind and quantity means not same good. Similar goods for which price they are charging into 90%. That means 10% profit margin. Let us assume they have said it as 90% of similar goods value. Sir, among these two, which value I need to take? Whichever is beneficial to the SSC. That means whichever is lower only generally. Lower value only will be beneficial to the SSC so that low tax can be paid. So the open market value or 90% of the price charged. How much percentage is specified there? 90% of the price charged for the supply of like, kind and quality. For supply of like, kind and quality. Is it clear here? So now coming to the next thing. Sir, if this is not available, open market value is not available, and like, kind and quality is also not available, sir, then what we need to see? The value of the supply of goods or services of okay, that was completed already. Here if you see, cost of supply plus 10% markup. What was specified here? Cost of the supply. Sir, this B point nothing but here I have given, sir, this B only, this one, 90% of like, kind or quality or the open market value. This has already been considered. If this is not available, then cost plus 10%. Sir, if cost calculation is also not available, sir, then any other reasonable means, that means best judgment assessment, officer will determine on his own the value. So first preference will be given to open market value or 90% of like goods and quality. Next preference, cost plus 10%. 10% we assume that will be the profit margin, cost plus 10%. Next, reasonable means. Okay. But very, very important, sir. Many people doesn't know this one. Let me give you with one best example. Let me give you one best example. Sir, Mr. A just a minute. Yeah. Sir, Mr. A is selling goods to Mr. B. Open market value is 1 lakh, but actual transaction price is 80,000. If Mr. A and B are related, now tell me, sir, on which value we have to pay GST? If A and B are related, on which value we need to pay GST? On 1 lakh or 80,000? Whenever the seller and buyer are related persons, then what we need to see? In such case, open market value will be regarded as the place of value of supply. So on 1 lakh only GST should be paid. But here the condition that was specified here is if Mr. B is a person who avails ITC, B means nothing but buyer. If buyer avails ITC, even though you write 1 lakh or 80,000, it does not have any difference. Even though GST is levied on 1 lakh, Mr. B will avail GST, entire GST levied on 1 lakh. If you charge GST on 80,000, then Mr. B will take ITC on 80,000. If Mr. B is also a registered dealer who avails ITC, what is the use of paying GST on 1 lakh? Immediately Mr. B will take ITC now. That's why if the seller and buyer are related, plus if recipient is eligible for full ITC, listen carefully. If recipient is eligible for full ITC, that means here even though you levy tax on 1 lakh, recipient immediately if he avails ITC, what is the use of the concept of this rule? That's why in these cases you pay GST on 80,000 only. In these cases you pay GST. That means the transaction value will be accepted as the invoice value, means nothing but transaction value. The transaction value will be accepted as the open market value. The transaction value will be accepted as the open market value in such case. Okay. So when recipient is eligible for full ITC, then invoice value will be accepted as the open market value. That means on 80,000, if you charge GST, that is enough. On 80,000, if you charge GST, that is enough. Because Mr. B is eligible for full ITC. If Mr. B is not eligible for full ITC, then GST must be levied on rupees 1. Okay, so I think this concept is very clear. Next, coming to the next one. So here relative definition is given. The definition of the term related person I have specified here in next page. For total 9 relations were given, sir. If you observe, 8 plus 1, total 9 relations were given. Related party definition. So this definition is completely different manner. This definition will be in a complete different manner. So let us see one by one, because if it was sold to relative, then we have to go for valuation rule. No? That's why now let us see first of all, what do you mean by the term relative? If they are directors in one another businesses, sir, in A Limited, Mr. A is the major shareholder. In B Limited, Mr. B is the major shareholder. Mr. B is the officer of Mr. A Limited. Mr. A is the officer of B Limited. That means they are officers or directors of one another businesses. In such case, any transaction between A Limited and B Limited will be treated as a related parties. On open market value, they need to pay GST. Like that, for every point I have given examples, partners. So Mr. A and Mr. B, if they are partners in the same firm, then any transaction between A and B will be regarded as the related party transaction. Next, employer and employee will also be treated as related. Here, if you see this example, Mr. X is having 25% holding in company A and 25% holding in company B. Now, this company A and company B will be regarded as the relatives. Any transaction between company A and company B, then what we need to do? We have to come for valuation rules to determine the value of something. Next. Controlling one another, holding and subsidiary companies will be regarded as the relative parties, point number 5. Or 2 persons controlling the same person. If you see, X Limited controls board of directors of A Limited and B Limited. Then A and B Limited will be called relatives. Next, if both the persons A Limited and B Limited both control X Limited, then also A and B will be called as the relatives. Very simple, sir. Examples I have given. Next, from individual point of view, for individuals who are relatives, spouse, children, brothers, sisters, grandparents, if they are dependent, brothers and sisters, only if they are dependent, they will be called as the relatives. Okay. So here, sir, in chat box, how to download material, they are asking. Just click on that one, sir. Just if you click there, automatically it asks to download in your PC. Just you click in chat box, it was given. Just you click on the material, automatically you can download. That they are the members of the same family. That means spouse, children, any transaction between individual and his spouse, any transaction between individual and his children, grandparents, they will be regarded as a related party transaction. On open market value, GST would be left. Next, sole selling agent. If we have only one agent, we have 10 to 20 agents, then okay. Transaction through agent, open market value need not be followed. But if we have only sole selling agent, only one agent, any product we sell, through that agent only we will sell. Then when any product is sold to that sole selling agent, rule number 28, it was given in next one. So here what we need to consider here, for sole selling agent, rule number 28 we consider other than through agent. Even though through sole selling agent we sell also, we have to take open market value as the preference. Only one agent if we have. If you have many agents, then no issue. Okay. So coming to the next one. We have completed related party definition. Next, sold through an agent. That's what I need to discuss. Rule number 29. Separate rule has been given. For all the related parties, rule 28 will be applicable. But sold through agent, separately they have said that same, sir. Here if you see, normal open market value or 90% of the like goods or quality, whichever is beneficial. If this is not available, 110% of cost of supply. If this is not available, best judgment assessment. These aspects, just now we have already had a discussion. So now let me continue. So by these three rules we have completed, sir. Rule number 27, when price is not the sole consideration. Rule number 28, when seller and buyer are related persons. Rule number 29, sold through an agent. Till here we have completed. Now coming to rule 30, we have already completed. 110% of cost of supply in middle we have said no, that is nothing but rule 30. Rule 31, if it cannot be determined, best judgment assessment, that is rule 30. So till rule 31 we have completed, sir. Now let me come to rule number 31A. Sir, what is rule number 31A? Sir, for lotteries and betting, sir, on inclusive basis we have to pay GST. On lotteries, only on lotteries on inclusive basis. Sir, lottery ticket sold for 1 lakh. On that 1 lakh, only 1 lakh into 100 by 128 is the value. 28 by 128 is the taxes. That means including that amount we need to see. What we need to see, sir? Including that amount. That means on inclusive basis. Or if government notifies any rate, the state government notifies any rate, that rate. Whichever is higher we need to consider. Whichever is higher we need to consider. In case of supply of lottery, higher of the two amounts, 100 by 128 of the face value or price as notified by the government. Whichever is higher we need to consider. So that supply of lottery we have completed. Actionable claims like betting, gambling, race clubs. Here, if I put betting for 1 lakh, then on 1 lakh GST is required to be paid. This is on exclusive basis. Lottery on inclusive basis. Remaining all on exclusive basis, the value of supply is been given. That is rule number 31A. Next, rule number 32. Very, very important, sir, practically also. Rule 32, we have another 5 internal rules. Special valuation methods we have for 5 businesses. For foreign exchange dealer, 1 valuation rule is given. For aid travel agent, 1 rule is given. For life insurance business, 1 rule is given. Second hand goods, very, very important, 1 rule is given. And finally, for vouchers, what is the value of the supply? Sir, we are in rule number 32. We have begin valuation chapter where basics were completed. And in second part, rule 27 to rule 31 we have completed. Now we are in rule 32. In rule 32, internally, how many valuations were given? 5 different types of valuations were given. So now let me begin with the first one. Sir, what is the first one that was given here? Purchase or sale of foreign currency, including the money changing. So let us begin with that aspect, sir. Foreign exchange dealers have 2 options, 2 methods, sir, to determine the value of supply. Sir, foreign exchange dealers, what is their income generally? For all the foreign exchange dealers, their income is commission only. But practically, in invoice, they are not writing commission. Only exchange currency value they are writing. It includes their commission also. But GST should be levied only on commission, not an entire currency. So in order to find out that commission, 2 methods were being specified here. Number 1, method 1. If RBI reference rate is available, difference between buying rate and selling. Very simple. Sir, RBI rate is 70 rupees per dollar. But this exchange dealer has sold for 75 rupees, sir. So 75 rupees minus 70 rupees. That 5 rupees will be regarded as the commission. That 5 rupees is the value of the supply. On that 5 rupees, 18% GST will be levied. On that 5 rupees, 18% GST will be levied. Sir, what was given here? Value of supply will be the difference between buying rate and selling rate. The difference between buying rate and selling rate. This is in which case? When RBI reference rate is available. When RBI reference rate is available. Sir, what happens if RBI reference rate is not available? Then 1% of the gross amount they have specified. When RBI reference rate is not available, how much has been specified here? 1% of the value of the supply has been given. Here if you see, sir, when RBI reference rate is available, difference between RBI rate and actual rate. But RBI reference rate is not available. then 1% of the value of the goods. Okay, 1% of the value. That means for 10, I have given 10 lakhs rupees and purchased foreign dollars. Then in such case, on 10 lakhs into 1%, we deem your commission. 10 lakhs into 1%. So 10,000 we deem commission. On the 10,000, you are liable to pay 18% GST. If RBI reference rate is not available, 1%. Sir, foreign currency to foreign currency if we exchange, then how to determine? That means, sir, dollars were exchanged for pounds. $100 I have exchanged for 60 pounds. Then what we need to do is see what is the commission in this case. First convert both into Indian rupees. Then lower of the into 1%. First convert using RBI reference rate. You convert dollars into rupees, convert pounds into rupees. Among those two values, whichever is lower into 1% will be regarded as the value of the supply. Sir, here value of supply means nothing but commission. So commission will be included in the currency itself. That's why to separate the commission, these methods were being specified. If first method is beneficial to you, follow first method. Or else another method 2 is given. Without having any RBI reference rate, simply for first 1 lakh, like income tax slabs they have given here, sir. First 1 lakh you pay the value of the supply. Sir, here value of supply means commission. We assume that for the first 1 lakh, your commission is 1% or 250, whichever is higher. Or 250, whichever is higher. From 1 lakh to 10 lakhs, if you make exchange, we assume that 1000 for first 1 lakh, 1% means 1000 plus additionally 0.5% we assume your commission. If you make currency greater than 10 lakhs exchange, for first 10 lakhs 5,500. How we got this 5,500? First 1 lakh 1% means 1000 plus balance 9 lakhs into 0.5% means 4,500. So 4,500 plus 1000 comes to 5,500. So 5,500 plus additional amount in excess of 10 lakhs, 0.1% we assume your commission, or maximum we assume your commission is 60,000 per transaction. Sir, 10 crores currency has been exchanged in a transaction. Then also we assume 60,000 as the commission. Because here the term that was used is whichever is lower. So minimum 250, maximum 60,000. Okay. So this is method 2. Sir, this method for whom, sir? This is for money exchange dealers. Money exchange dealers. So what would be the value of the supply? We have discussed here. 2 methods were given. Among these 2 methods, the beneficial method must be chosen in the beginning of the year. That means in April month return itself, you have to choose which is beneficial to you, and it should be followed for the entire year. Next year, if you want, you can change the method. Method 1 or method 2. So year wise, if you want, you can change. But once you have opted in 1 year, for the remaining part of the year also, you have to do the same thing. Okay. So now coming to the next one. Now coming to the next one. In case of 8 travel agents, sir, we are in which rule? Rule number 32. In rule number 32, we have 5 internal points I have set to you. In all these 5 internal points, we find out the value of the supply. First internal point got completed. Foreign currency dealers. Now second point, 8 travel agents, sir. On domestic ticket, we assume his commission is 5% of the fare. On international tickets, we assume his commission is 10%. Sir, his actual commission is 15%, sir. We don't bother. We assume that 10% of the basic fare is the value of the supply. Sir, international tickets from US, sir, 10 lakhs value of ticket is booked, sir. We assume his commission is 10%, 1 lakh. On that 1 lakh, 18% GST is required to be paid by the 8 travel agent. So 8 travel agent on basic fare. Basic fare means nothing but here I have given you clearly. Airfare on which commission is not normally paid. That is called as basic fare. In this basic fare, whether passenger service fee and user development fee should be included. Yes. Any charges collected from the consumer you have to include. Passenger service fee, user development fee, if you collect also, those must be included in the value of the supply. So now coming to the next thing. So rule 32, First, we have discussed valuation rule for foreign exchange dealers. Second, we have discussed valuation rule for. Second, we have discussed valuation rule for whom we have discussed it, sir? Air travel agent. Now we are coming for valuation rule number 3. What is valuation rule number 3? Internal rule. Life insurance business. Sir, if you see insurance receipts, LIC policy receipt, whether GST is being charged, yes. How much will they charge? Yeah, let us see here. Risk cover policies plus investment. That means these are called ULIP policies. Unit linked insurance plans. ULIP policies we usually say, sir. For this ULIP policies, gross premium charged minus amount allocated for savings. That means if I am paying 1 lakh premium, sir, in which 80,000 they invest in mutual funds. Those are called ULIP policies. So balance 20,000 only is the value of the service. On the 20,000, 18% GST will be charged. Okay, gross premium charged minus amount allocated for bonus. This is for ULIP policies. Single premium policies, 10% we assume value of supply. Single premiums are 5 lakhs I am paying. Single premium, yearly I need not pay. 5 lakhs I am paying. Then 5 lakhs into 10%, 50,000. 50,000 is the value of supply. On that 50,000, 18% GST is required to be paid. On that 50,000, 18% GST is required to be paid. Okay. Next. Third one. Other cases. That means normal endowment policies. Usually or casually, every person generally takes endowment policies only. That means even though risk is not incurred, we will get our money back. Even though that person has not incurred his debt, he will get his money back along with bonus. For those policies, for first year premium, we assume 25% is the value of the supply. For further premiums, we assume 12.5% is the value of the supply. So first 25% we assume, for further premiums, 12.5% will be regarded as the value of the supply. Sir, here for let us assume 1 lakh premium I am paying. On that 1 lakh, this is second year premium. 1 lakh into 12.5%. 12,500 is the value of supply. On that 12,500, 18% GST will be charged. So this is to determine the value in case of life insurance. Sir, for risk cover policies, that means we get return only if there is a risk. Risk means death. Only that person has incurred his debt, then his family members will get lump sum amount. That is called as risk cover policies. For risk cover policies, entire premium charge. What was given here? Entire premium charge will be regarded as the value. That means 1 lakh premium, 1 lakh into 18% GST are required. For risk cover policies, entire amount will be regarded as the value. So this is a case of life insurance business. We had a discussion. Now let me continue. Second-hand goods, very easy if we understand. Sir, for the dealers of second-hand goods, it might be a mobile, car, whatever may be. Let me take car as example, sir. Second-hand cars, they are purchasing and selling. True value. Second-hand cars, they purchase and sell. 24 cars, they purchase and sell second-hand cars. So here, second-hand car, they are purchasing for 5 lakhs and they are selling in market for 5 lakh 50. Then what is the profit they get? 50,000. On that 50,000 only you pay GST. Mobile phones, let us take example. Second-hand mobile dealer. Yeah. Let us assume we are the dealers of second-hand mobiles. Second-hand mobile, let us assume this mobile is being purchased for second-hand mobile is being purchased for 50,000. 15,000 if this is purchased. And to another person, we are selling this mobile for 20,000. That 5,000 is our profit. On that 5,000 only you pay GST. Sir, am I clear? Margin scheme is given for second-hand goods. Sir, if there is no margin, if it is negative, no GST. Is it clear? So if ITC is not availed, sir, initially, if ITC is not availed, then only we have to compare this margins. If ITC is availed, then using ITC rules, 5% per quarter is eligible ITC, balance amount we need to pay. So that's why margin scheme, when it is applicable, when ITC is not available. Selling price minus purchase price will be regarded as the value of supply. Sir, if we sell for a loss, then ignore, leave it. So this is the provision which was given for second-hand goods. So coming to the next one, an example is also given. You can go through that one if you want. Now coming to the next one, redeemable vouchers or coupons. Redeemable vouchers or coupons. Sir, what do you mean by the term redeemable vouchers or coupons? Sir, redeemable vouchers means yesterday in the chapter time of supply we have already discussed. Any coupons or vouchers were given. So what is the time of supply? When we know against which product this coupon can be used, then at the time of issue itself GST is required to be paid. When we don't know against which item to redeem, then at the time of redemption we need to pay GST on vouchers and coupons. So whether vouchers and coupons were liable to GST, yes. What is the value? Whatever the value it contains, that is the value. Here if you see the worth of 1500 worth of Sodexo is supplied by the taxable person, then what is the value of supply? 1500. Okay, next. Kerala flood cess, for us this is not relevant, sir, but generally speaking, during floods which has come to Kerala 3 years ago, they have levied flood cess additional. That flood cess, you don't add value of the supply, don't levy higher GST. Flood cess need not be included, they have specified, but now that is not relevant. Next, services of a pure agent. Sir, can chartered accountant be called as a pure agent? So chartered accountant, you are saying agent, how far it's fair? Yeah, one example I will tell you, sir. One client tax audit I have completed, sir. I am going to receive fees 30,000 rupees plus tax amount 60,000 rupees. I have said, client said that you pay tax, sir. I will transfer to your bank account. Okay. So now to my bank account, 60,000 tax plus 30,000 fees. Total 90,000 I have to receive plus GST on 90,000 or 30,000. Tell me, sir. Total I am receiving 90,000 from client. Now GST I have to charge a 90,000 or 30,000 audit fee only. On 30,000 audit fee only we have to charge GST, because for that 60,000 we have paid tax on behalf of the client. That's why here we will be called as a pure agent. Like that, any pure agents only on additional consideration they receive only GST will be levied. That means in this case only on 30,000 GST will be levied. On tax amount 60,000 GST will not be levied. Because sir, we are paying 60,000 taxes now. Whose PAN number will be there? Client PAN number. So that means it is a right of the client. So here if you see pure agent, only on additional amount we receive only we need to pay GST. Only on the additional amount. Let me show you one example, sir, for understanding sake. Here if you see, suppose a customs broker issues an invoice for reimbursement of some few expenses for a consideration towards agency services. Here if you see agency income, traveling expenses, customs duty, dog juice. Sir, in traveling expenses, whose name will be? Agent name or importer name? Agent name only will be. So we need to include this in the value of supply. Agency income we need to include. But customs duty on whose name we will pay? Customs broker will pay customs duty in the name of importer. Dog juice, that means any payment to ship authorities also will be made in the name of customs broker. That means we are acting as an agent for these 2 points. But these two we are claiming from the party. So on 25,000 GST will be. So on 25,000 GST will be. So only on agency income and traveling expenses GST will be. Even we go to bank audits, sir. Sir, all are aware this one. Bank audits are along with fee bill. For expenditure reimbursement also we raise bill, no? Whether expenditure reimbursement also we charge GST. Yes. Because there we are not acting as a pure agent. Hotel name, hotel booking, room booking, we are doing in our name. Food we eat, in our name bill will be raised. Traveling expenses, train ticket and bus tickets, in our name, on our name, bills will be raised. So here, we are not acting as a pure agent. That's why reimbursement of expenses bill also GST we usually charge. Okay. So this aspect has been completed. Now let me continue. We have two more rules for discussion, sir. Rule number 34 and rule number 35. And after that, one special point regarding motor vehicles, I will give you clarification. First, sir, if invoice is raised in foreign currency, how to convert into Indian rupees? In case of goods, CBIC rate for Customs Act, for every fortnight they will give one rate. Using that rate you convert. In case of services, generally accepted accounting principle. That means in your books of account, what we follow? We take SBI rate, sir. So using SBI rate, you convert. Sir, if invoice is raised in foreign currency, how to convert it to Indian rupees? Rule 34 has specified that. In case of goods, what is the first part, sir? In case of goods, what has been specified here? In case of goods, CBIC rate you need to see. In case of services, generally accepted accounting principle. That means as per our books of accounts, what we usually follow? SBI rate or RBI rate. That rate we need to follow. That is rule number 34. Next, coming to rule number 35. Sir, if taxes are not separately charged in invoice, then what happens? No GST. If I don't charge GST from consumer, I need not pay taxes to government. Is it correct? No. If we charge GST, that GST we will pay. If we don't charge GST, then what happens? On inclusive basis, we need to pay GST. Rule number 35. If you don't charge GST from the consumer, then you have to pay GST on which basis, sir? On inclusive basis, you need to pay GST. That is rule number 35. Next, this one regarding interest calculation. I have already explained you, sir, regarding interest. Penal interest or penal charges or normal interest for delayed receipt of consideration. That interest will form part of the value of supply. We have to pay GST. Sir, loan interest will be liable to GST? No. Bank interest will be liable to GST? No. Deposit interest will be liable to GST? No. Because there are finance transactions. But for belated receipt of consideration, additional interest we receive, that interest will be liable to GST. Okay. Now coming to the last topic of our discussion. This is going to be our last topic discussion in today's session. Regarding a sale of motor vehicle. What is the last topic, sir, which was given here? The sale of the motor vehicle. Sale of the motor vehicle. Sir, motor vehicle at the time of selling. Sir, motor vehicle is asset to us. This is not stock in trade. Let us assume. This is not stock in trade. It is asset to us. If that stock in trade is being sold, asset is being sold, whether GST is required to be levied. If that asset is being sold, whether GST is required to be levied. This is the problem arising to many persons. If in business, if we record that motor vehicle, at the time of selling that motor vehicle, should we require to pay any GST is the question. So for which the answer was given here. We are going to have a complete clarification regarding this aspect now. So if we see, first part, ITC availed under earlier law or GST law. So generally on motor vehicle, should we avail ITC? No, we should not avail ITC on motor vehicles. Generally, we should not avail ITC on motor vehicles. But there are some exceptions. If we are in transport business, if we are in imparting motor driving skills like driving schools, then we can avail ITC. There are some exceptions, no? Okay. So here, if we see, when ITC is availed under earlier law or GST law, then at the time of selling such motor vehicle, GST is payable on the sale consideration. Since you have availed ITC, sir, I have purchased motor vehicle. I am in transport business. I have purchased motor vehicle for 10 lakhs and I have availed ITC. Now, this vehicle, if I am selling for only 3 lakhs, On that 3 lakhs, you are liable to pay GST. GST is payable on the entire sale consideration. If ITC is availed under earlier law, that means under VAT Act or GST Act, whatever may be. If you have availed ITC, then GST is payable on the entire sale consideration. Sir, if I didn't avail ITC, then what happens, sir? If you didn't avail ITC, then here this is the clarification we need, because on motor vehicles, usually it's a blocked credit. We don't avail ITC. That motor vehicle at the time of selling, if there is margin of supply, we have to pay GST. What do you mean by that term, margin of supply? If we are claiming depreciation, sale value minus WDV. If we are not claiming depreciation, sale price minus purchase price is the margin of supply. Sir, WDV in books of accounts 1 lakh, sir. I am selling for 1,20,000. Then on 20,000 you pay GST. If you are not availing ITC initially, then on margin of supply you have to pay GST. Sir, if I am availing ITC, sir, then on entire sale value you are liable to pay GST. That is the difference. Sir, if I am selling for a loss, then ignore, no GST at all. Sir, what is the rate of GST on motor vehicle? Here I have given clearly. So when 18% is applicable, when 12% is applicable for some motor vehicles, I have given below. If you want, you can go through such rates. Sir, generally on motor vehicle, 28% only. Generally, bike if I purchase, 28% GST will be charged. But on second-hand motor vehicles, rate of GST has been reduced. Here I have given, sir, only 12% generally. If CC capacity 1200 or more, 18%. 1500 or more, 18%. Diesel with engine capacity. Petrol, this is petrol, this is diesel. For sports vehicles also 18%. Remaining all vehicles only 12%. Generally, sir, initially if I purchase motorbike, 28% GST they will charge. But for second-hand vehicle, that means second-hand in the sense, for resale of motor vehicle, if I am having margin, on that margin of supply, lower rates have been specified in the notification. This notification has given this clarification, sir. If you want, you can go through this notification 8/2008. So by this, all the aspects regarding valuation from basics onwards, what are the conditions specified till here, everything I have specified to you. And material is already been shared in the chat box, but still many members were asking. So for them, once again, I am sharing, sir, you can go to the chat box. And there is one question which was raised here. Sir, if a business person buys motor vehicle for his business, is he eligible for ITC? Sir, if he is in transport business, he can avail, sir. For his goods transportation, he can avail. But generally, motor vehicles, car, bike, it is a blocked credit. We should not avail ITC at all. If you avail ITC, at least now you reverse. Okay. Sir, please share yesterday's material also. Sure, just a minute, sir. I will put it. In the meanwhile, any doubts, if you arise, you can post it in the chat box, sir. So once again, I thank Vijayawada branch for giving me this opportunity for 2 days regarding this discussion, time of supply, place of supply, and now value of supply. So all the 3 things. So let me share yesterday's material also. Yeah. So by this, all the aspects regarding valuation I have discussed it, sir. Any doubts, you can ask me. You can put it in the chat box. Yesterday's material also I have added in the chat box just now. Yeah, just now I have added in the chat box, and some doubts were being raised just now. First, doubt number 1. Sir, like financial credit notes, any financial debit note is there, sir. That just now I have explained, sir. Financial debit note is not permissible. Financial debit note is not permissible. Compulsorily, we need to issue GST debit note only, because GST debit note taxes to government increases. That's why in debit note, the term that was used is shall, and in debit note, the term that was used is may. I repeat, in credit note, the term that was used is may. In debit note, the term that was used is shall. That's why financial debit note concept is not available. Okay. That's it, sir. So all the materials and everything were being shared. Yeah, sir. It's hand over to you.
Thank you very much, sir. Thanks a lot for sharing your expertise to other members. It will be very helpful for us. Thank you, sir.
One question was being raised by Ramakrishnan Garu. Sir, auditor gets actual travel expenses reimbursed. Is it subject to GST? Yes, sir. It is subjected to GST. Even though on each and every traveling expense already GST is charged also. If it is eligible to you, you can avail ITC. Your GST number you are putting. But at the time of raising bill to the bank, all the reimbursement of expenses, hotel bills, travel bills, accommodation bills, whatever may be, all the things we need to include and charge GST. Even earlier in service tax also same thing. Now in GST also same. Yes, sir. It's hand over to you.
Yeah. Thank you, sir. Thank you very much. Thank you all. We are ending the session now. Thank you.